Okay, so I just pushed the button. I want to welcome you folks. My name is Stephen Fetter. I manage the United Learning Program for the General Counsel Office, and it is a pleasure once again to welcome you into our webinar room for yet another installment in the never-ending series. It's quite a community we're developing here, talking about Jesus' favorite topic, which is money. Anyway, we're glad you're here. Glad that Eric is back with us. Eric assures me that he's really not back from sabbatical. He's really just a ghost tonight, but he's a ghost who does an awful lot of work because he's put together almost all of the things we're going to talk about tonight. He has a funny way of planning his sabbatical. Anyway, Eric, we're glad you're here and welcome back. Welcome back from New Zealand. And wonderful to hear you had a good trip and looking forward to hearing what you have to say tonight. Over to you.
Okay, great. Well, thanks everybody. I trust my sound is okay.
Sounds great.
Great. Okay.
I'm going to mute other people's mics just so that we don't interrupt each other.
Okay. Well, as has been our practice over the recent years, I post one thing and read another. So just to remind everyone, this has always been the vision and mission statement for me when the church didn't have one, and now, of course, we talk about being bold and daring in pursuit of justice, deep, bold, and daring. But also want to include a land acknowledgement because Indigenous reconciliation is probably the most significant and perhaps the clearest part of the church's plan going forward. We begin this meeting by acknowledging that we are meeting on land that has been inhabited by Indigenous people from the beginning, and that long before today, Indigenous peoples have been stewards of this place. Wherever we are in the country, we are grateful for the opportunity to meet online together, and we thank all the generations of people who have taken care of the land wherever we are. We recognize and deeply appreciate their contribution to our place. We recognize the contributions of First Nations, Métis, Inuit, and other Indigenous peoples, what they have made in shaping and strengthening our communities, our province, our territories, and our country. And as settlers, this recognition of the contributions and historic importance of Indigenous people must be clearly and overtly connected to our collective conscience to make the promise of truth and reconciliation real in our communities. So with that, I really long for the day when we don't have CRA news. Like there was a time when they would change the form every couple of years, and a professional like Clyde might have a couple of nuances to report on, but it seems like it never stops these days. So we do have some updates for you on some of the key topics. Hopefully most of you have got your financial statements finalized. Maybe many of you have already had your annual meetings. My own church is this month, but for Susan, I hope you've done your stats or plan to real soon, all those things. But we have a couple of more immediate deadlines too. So tonight, this is what we're hoping to report on. There will be a number of repeat slides from earlier sessions, and I will go over those quite quickly. But again, just for folks who might be picking up the slides or picking up a recording and who haven't seen an earlier one, we do want to just remind people of the key deliverables or accountabilities that treasurers have right now. So yes, there's a new phone or a new fax number. Okay, so first of all, this underutilized housing tax thing, where we are caught in just a technical reporting requirement. We think it will go away. But what we have done, there is a deadline, an absolute deadline of April 30th, 2024 for 2022 reporting, and we are suggesting that you report 2023 as well, as lawyers say, out of an abundance of caution. The CRA is also, just on Thursday, I was alluding to this before we started, did an announcement that for, uh, made for many grumpy accountants across the country, which is to say that they won't be requiring T3 trust reporting for bare trusts in 2023. They announced this on the afternoon, Monday, Thursday, and the reporting was due on April 2nd. So you can imagine all these accountants working to death. I'm sorry, I don't think that's funny for them, but the irony of this is what it is. Again, this did not or should not affect churches, because we have taken the position that a charities directorate exemption announced in the fall applies to our churches as well. So I just want to stress that this is completely unrelated to the underutilized housing tax reporting, because there have been quite a number of questions on that in recent days. So thank you, Rose, for flagging that for us, and hopefully you'll get fewer calls, at least from our audience tonight. Okay, on the underutilized, you've seen this. We're taking the view that just in case we should file, and oh, I should show you. By the way, on my own house, I forgot to file. Okay, I frankly wasn't even in the country, but nonetheless. And today I got a tax notice for my underutilized housing because I'm deemed vacant by the City of Toronto. The tax is $16,000 to be paid in 3 increments. I have to go and tell them that, oops, I forgot to file, and I have in fact lived here for the last 32 years. Anyway, that's not your problem, but I thought you might find that interesting. Okay, the key point for us, we've been through this for a couple of months now, is we have a sample form completed on the website for you. So check it out if you have any questions. Basically, if you're vacant, complete sections 1, 2, 6, and 9. If you're occupied, complete sections 1, 2, 5, and 9. We're not going to go over that tonight in the form, but each trustee must complete. So Rose has made up a form where she is one of the trustees, and people like Bugs Bunny and Elmer Fudd, 5 trustees, each have a 20% share and have to report on it. And again, for anybody who's interested in the technical bits, we are claiming an exemption because we are saying, hey, we're a charity. We're reporting because we're a trust, but we're exempt because we're a charity. And this is the box on section 6 that you will see on the sample form. Okay, if you want more craziness, the CRA has updated the form in a way that all the accounting professionals interpret as meaning that you don't have to file 2023, because the form very specifically uses updated definitions. But Parliament is not in session. And, our advice, as annoying as it is if you're going to file, which you should, file both years. I mean, there's nothing bad that can happen from that. And again, please don't shoot the messenger. This thing is what it is. Okay, the T3010, Clyde's going to talk about a few questions that we'll have, and I'll talk about the most common errors. But again, we have a webinar on T3010 completion here on the ChurchX site, and all the regulars will already know this. So there is a new form. Make sure you use the current version of the form for your filing this year. And there are a few changes. There's a couple of columns that go away, and there's a couple of new things added. And those are, in fact, some of the questions that Clyde will speak to just a little later. The newest thing is disbursement quota. It's been on the form forever. I personally filled it out for a few years back, about 10 years ago, and then I stopped because it didn't matter, and no one seemed to care, and they didn't seem to require it. But now it is a straight up new requirement, And there is a schedule to be completed, and I'll include it in this deck so that it's in the slides. And basically, once you go through it, I hope you're all feeling more comfortable. If you have gone through it, we've had a few people send us examples. Jane Brooks sent us some examples. I'll take you through one really quickly. But this will impact very few, if any, congregations in the country. It's just an arithmetic calculation that you need to do. And basically, again, I'm including the wording here, but even if you, in the remote instance that one or two congregations in the country somehow come up with a deficiency, you can possibly go back 5 years. So there's lots of remedy, but I'm telling you that I would bet that there isn't a single person on this call that will have a disbursement quota problem. Feel free to take me up on that if you want. So then there's the question of how you calculate it, and it's the whole notion of assets that aren't used in your charitable activity. For us, that is typically in your longer term investments, arguably even your bank accounts, but that is never going to get you in trouble, or I'm sorry, that is never going to create a disbursement quota problem, in my opinion. The only instance where it could possibly arise is if you happen to own some really high value unused land or building. So this outlines the calculation. Again, the most common aspects are investments, and then they very specifically mention that a church building is used in your charitable programming. So if this is an example literally from the CRA, if you own a building that you use to carry out, for example, a church, you would not include this in the disbursement quota. However, if you rent out a dedicated portion of it, then you might want to include a pro rata portion of your building, your accounting value for your building.
How come it's back to not using my?
Oh, and so this is the balances you need to include on the form are 2 years back. So your January 2021 and December 2021. And as I say, for my own church, that's our investment balances. When you do the calculation, this is from the form. What you will find is you need a really big number. For example, if you had $10 million of investments, you would just need to have, just over $400,000 of granting and charitable expenditure on your report. And if you have $10 million and you aren't doing at least that, then frankly, you're not being very faithful either. So the odds of it are really, really low when you do this calculation. It's $35,000 of charitable activity, granting or spending on the first million that you have. And then it goes up to 5% for amounts over $1 million. It is not a big deal. So now I've listed here the most common filing mistakes. Okay, if you've done your financials, you've had your annual meeting, the next thing to get out of the way is your charitable return. Susan Jackson would say the next thing is to make sure your statistics are submitted. But either way, do both. The dumbest thing you can do as a treasurer is missing the deadline for filing a T3010. It creates all kinds of work and embarrassment and a $500 fine, all of which are unnecessary. And you got till June 30th for those of you with a calendar year end. Something we bumped into a lot during COVID. Hopefully everyone on this call has learned their lesson and doesn't do this. But when you list the names and birth dates and addresses for your governors, Do not put end dates just because the year ended. Anyone who's continuing to serve, that end date must be blank, or else all your officers get zapped from the CRA database. And that creates all kinds of problems trying to liaise with them. On the qualified donees, the T1236, do not list anything that does not have a charitable number. It again triggers an automatic audit, and basically it's an amount that is considered, typically will be ineligible, and it'll come after you for it. Even if the church is in the process of closing, we've said this many times, we suggest keeping your charitable number active until you've dealt with the assets, and therefore do not answer yes to question A2. And of course, for the disbursement quota, be sure to complete that in. Now, Clyde, you had a number of questions, I think, from Valerie and perhaps a few others too. Could you perhaps take a moment to speak to those? You're muted. You're still muted.
Yep, there we go. Just takes time to find it. I've got 4 questions that Valerie sent us earlier today through ChurchX, and it's a great way to do it because I was able to go over them and find response for each one. So I don't have slides for them. I'll just talk to them. Valerie's first question under the revenue: where should the UCC Foundation money that's been received be listed? UCC Foundation is a separate charity, so you will list any funds received through them on line 4510, and that's the same place where you would put anything you've received from Canada Helps or PayPal or Canada Church Online Giving, and I forget, there's about 6 or 8 of them that are in use. And so you just have to list it as a other charity. While we're talking,
just to clarify, on PayPal, that's a method of payment as opposed to a charity, isn't it?
no, they actually have a charity part now.
Great.
So if you know it comes in through the charity, you can list it there on 4510. If it's just coming through some other purpose, which most churches don't have set up, then you'd have to split it. But while we're talking about the UCC Foundation, I've had a question, and it wasn't on the list from Valerie, but your assessment is not a donation to the United Church of Canada. The assessment gets recorded on somewhere here, I've got it. It's listed as a membership fee. And so that is something that a lot of churches are missing out. They put it down as like a donation, a qualified donation, and we shouldn't be doing that. The membership fee is a 5 in disbursements, and it's on line 4830. So that's where the assessment gets recorded. Going back to Valerie's questions, qualifying disbursements, that's the disbursements that you list on your T1236 form. And that's the ones that, as Eric mentioned, if they've got a charity number, a business number with an RR extension on it, then that's where you'll list it. It's the same amount is then moved up to line 5050. And so it's an expense that you have. The funds are going out. Where do the income and remittances to UCC M&S go? Well, M&S to me is not income for the church. It's funds that you are gathering to pay forward on. And so that's one of the ones that you list on the T1236. Because you do have a business number with an RR extension on it. And so that's where the M&S funds should be listed. And then it gets rolled up through, as I was just saying with the others, to line 50/50. If you happen to be in a position where you're getting from the UCC payments because of short-term disability for one of your employees, that should get reported under line 4650, possibly 4655, but it's an insurance claim. It's something other. 4650 is where you would put the dollar value. 4655 is you would indicate it as an insurance claim being included on that line. And then the last one, the average value of property not used for charitable activities or administration. Eric's already mentioned this in the building. The way I look at it is if you've got a part of your building that is under lease to a permanent non-charity organization, like a Montessori school, but not strictly to that, then you should prorate the building, and that becomes the portion of your building that is not used in charitable purposes. It's a rough square footage is how you would deal with it, but make it very rough. You don't want to be exact because nobody's exact on square footage. Prorated. Those are the questions that Valerie sent, and I think I'm going to suggest that Stephen, do you have any more that have come up on the?
I do. I have a few questions that are related to the underutilized housing tax. So let me plow through those. And then Laurie's just, but while we're talking about the T3010, Laurie's just put a question here about the rebate that she got from the insurance company. What from the insurance program? Where does that get listed on the T3010 since you're there?
Reduce your line of expense for insurance. Probably I would put it under the occupancy costs, because that's where I tend to bury the insurance costs.
Okay.
But it is a rebate of premium, so it's not income. It would reduce your insurance cost.
Yeah.
Thank you. So just a couple of quick questions about the underutilized housing tax. Then Beverly is confused. Is this just for Mance property? She asks. And let me say to each of the folks who are asking questions, there was a whole long discussion about this in last month's webinar. So you can get quick answers tonight, but do go back and have a look at the presentation last month, because it was pretty comprehensive. Anyway.
But the short answer to
which
that
properties
one,
are we talking about, Eric?
Steve, the short answer to that one is yes, it is for Mance's, because those are residential properties that are owned by or held by quote unquote trusts or trustees. And we have about 400 across the country and that we know of. And those are the folks that are affected.
Great, thank you. So somebody's pointing out a difference between what was said last month and what was said on the form. The online sample form lists each of the trustees being a percentage owner of the Mance. They're each listed at 20%, but at the previous webinar, we were all told that every trustee should be listed as 100% owner. So
yeah, so that
what are we supposed to do here? Is that a change?
Yeah, that's a clarification as we've gone along, and as folks have talked to the CRA and gotten further guidance. So I personally, I guess I am responsible for saying just put 100. But my thought was that if we had 10 trustees, were they all going to put 10%? But the answer is yes.
Okay.
Now, if you've already filed,
from last month.
Yeah, if you've already, it is a change from last month, but if you've already filed, I wouldn't do anything to fix it. Like this whole thing is a foo-for-ah, and you just need to be able to say you've filed.
Perfect. Thank you. And Jane is asking, where do you put the church property tax address, and where's the trustees address? We've got part 1 and part 2 here. What goes where? I think it was answered in the chat, but for people watching the recording, we should get an answer to that as well.
To be honest, I don't have the form in front of me, but I think it's pretty, the part 2 is the description of the property.
Okay.
And I'm pretty sure part 1 has details for the trustee.
So what Rose has written in the chat is
Perfect.
Part 1 is for the trustees' personal information. Part 2 is the man's property.
I love it when I get it right on a guess. Okay. Okay.
So a couple of others have come in since I started talking. Rental income is used in our charitable work. So do we need to allocate a portion of space to non-charitable purposes for the rental income received?
Again, unless the space is absolutely committed to some other party, rental income is considered an allowable use of surplus charitable capacity. So the fact that you rent out rooms is just fine. Doesn't come into this. Clyde, were you going to say something similar?
I was going to say something similar. That's why I look at it as the lease is there and you do not have use of that space for any other purpose. Generally speaking, if you've got somebody like a Montessori school, they have that area 100% of the time.
I guess the question is related to the fact that this church is using the rental income they receive in order to promote charitable work.
We have a CRA ruling if anyone would like to see it, but virtually every charity these days that has property tries to derive some rental income. It's a complete non-issue.
But they're wondering if they still have to report it because the money they get from this exclusive use space is then used to support their charitable work. That's the
yes,
question.
it does.
Well, you do report it as income on the T3010 if that's the question. I'm sorry, I was misunderstanding.
Okay, so you report it as income, but you have to include it for the purpose of the disbursement quota.
That's right.
As non. Okay, thank you. Bequests and restricted funds, are they included in the disbursement quota calculations?
We're taking, again, you could get very granular here, but the short answer is yes. Basically, it won't be so much the bequests as the investment balance isn't being actively used other than to generate income. So the short answer to that is yes.
Okay. Somebody was confused by your discussion about the insurance rebate because you answered it quickly. So remind people again, what is this rebate and how do we account for it?
It is a promised premium reduction, so it should be offset. It should be a credit to the debit that you incurred for insurance expense. Because it happened a year later, it'll reduce this year's insurance cost, but it's basically a refund, reducing your expense.
Liz writes, I have already filed the T1030. She probably means the T3010, but in error, I used the market value of the church property. Our accountant says not to worry about it as the church doesn't pay taxes. I feel I should send a corrected return as the number affects other things down the line. Should I file a corrected return?
I'm going to let Clyde answer this.
I would not worry about filing a change to it.
Yeah. Just generally speaking, the CRA will always encourage. If you phone them up, they'd say yes, please. But the charitable return is unlike other things. Is unlike income tax or payroll tax or any of those things where there's money involved. It is an information return, and the real estate value typically doesn't show up even on your financial statements. So the CRA does get that. If you wanted to, you could. And frankly, it's easier these days because you can do it online with the My Business account. But generally speaking, our advice is always to fix things going forward. So don't repeat it next year. And if you've got a new treasurer, put it in the notes to say, hey, don't just copy from last year.
This Florence has a question which I think is related to the disbursement quota discussion as well. Florence says, at what percentage of the building being under lease does this become a problem?
It depends where you are. If there's a Florence I know in Vancouver that the building value might be a bigger number. But again, it needs to be based on what you're reporting on your financial statements as well. So it depends where you are, and my comment would be to just do that calculation. It will give you peace of mind right away. It would be very unusual. As I say, I did bet earlier that no one on this call would have a problem. But if you do, give me a call or an email, and we can look at going back and seeing if you have a disbursement quota room, which you probably would have.
While you're away, Eric, somebody sent me a calculation that she had done. They're running $1 million operating budget. She did the disbursement quota thing and realized that she'd have to have 20 million of assets before it was even a problem.
Yeah,
Yep.
that's the
Much
ratio.
better that night.
Yeah, no, the example I cited earlier, maybe I went over it too quickly, but basically, for 10 million, you need almost have half a million. If you weren't spending that on granting and expense, including maintaining your building, then you'd be offside. But the likelihood of that is really low.
Yep. So Arlene has a bequest that's restricted to church repair. Does the disbursement quota not calculate that we have to use those funds even if we can't?
Again, it's an investment balance. It really doesn't matter what the money is for. You might be able to hire a lawyer someday and debate this if you have to, but it's an academic question if you have tons of room, as most of our churches do.
Greg Watson got a payout of insurance claim, $20,000 for repairs after a sewer backup. Is that income? What's that considered?
If he's got spent that money, or did he get money back on it?
He doesn't say. He can include the payout of an insurance claim is what he said.
If it's money he spent, it's part of the occupancy cost. But if it's money coming back, it's like the one I mentioned earlier, where it's like the short-term disability. It's revenue reported on line 4650 with comment on line 4655. It's an insurance rebate.
Yeah,
but it might not even be that. I mean, I had an insurance settlement when my house sewer backed up, and the insurance company paid the contractors. I never saw a dime, but the house.
No, in that case, it doesn't touch your books, Stephen.
That's right.
This is a case where if they do cut you a check, for example, instead of arranging for the repairs, then if it hits your books, you have to account for it the way Clyde described.
Thank you. I think that's the end of the questions that have come in. So folks, hold your questions now or put them in the chat, but we're going to let Eric carry on, and I'll continue to accumulate them as we go ahead.
Okay. Well, listen, I haven't heard Angelica's voice for a couple of months because I've been away. So Angelica, can I throw this over to you, or would you like me to keep going? You need to unmute.
She can't mute her. She can't open her mic. Go ahead, Angelica. Now you can.
Oh, right. Thank you. Thank you, Stephen. Thank you, Eric. Thank you, everyone. Nice to see everyone here today once again. Just a few reminders that are critical and important and has posed a bit of a challenge for us here in the payroll team. So first and foremost, your authorized change of ADP contact persons that has to be completed at all times. There's two ways to do it. You can either complete the form and send it to ADP, and ADP will get back to you, or the payroll team. My payroll team can support you in completing the form. If you hit the next slide, it gives you a sample of what the form is, and you must complete it thoroughly and provide who, the access, depending on who it is, how you want it, if it's someone as a backup, or if it's the primary, the secondary, et cetera, which must be signed. And so this form must be completed and provided to ADP if you want to add or remove a contact person. Next slide. So when you're trying to make a permanent salary change, that includes whether it's the COLA or a change in salary and it's permanent, you must go back to the employee's profile to begin the process of changing that salary, and you must hit the employment tab. And so it's crucial that you do that. If you don't not go back to the employee's profile and hit that employment tab, the salary change will not occur. And I recommend that once you make that change, you run your payroll to ensure that that change has been completed and processed. Next one. This one we have had quite a few challenges with. Out of 100 errors that we picked up last month, 50 errors were incomplete information at the point of hires. So there is a field, which is, right, it's called the additional employee data tab, that you must go in there to enter the information related to benefits and pension. If it's not completed, and your payroll will be processed, but it will be incorrect information. So it is important that when you're setting up a new employee, a new hire, you must do all of the tabs, including this additional employee tab at the end of the modules. So that's key and important. Again, if you're having some challenges, if you're not sure, DataBridge, the ADP DataBridge has quite a few webinars and training sessions, but also my team is more than happy to walk you through how to do those changes on your team. And that's all I have for you guys tonight. Short and sweet.
Well, before we let her go, are there any questions on the payroll side, Steve?
At this point, I'm seeing one, and that was there was a suggestion that came up last month, Angelica, that people might consider switching from payroll every 2 weeks to payroll once a month in order to save costs. Somebody thought it was a great idea and wants to know how to do it.
How do you do it? Well, it requires ADP and our team to be involved. It's not an easy process because there is impact on employees' pay and fees, but it's not the best approach, I would say. If it's a monthly, semi-monthly is best for the benefit report that we get at the end of the month. But we can definitely look at it. Give us a call and we can assist you with it.
I've been paid monthly since I was ordained 35 years ago.
Just as an FYI, the national payroll is considering changing to semi-month, twice a month, just because it is posing a lot of challenges doing it once a month.
Interesting. Okay, thank you. Dawn is asking, should we have a second authorized ADP contact?
Absolutely.
When it gets hit by a bus.
Absolutely. You should always have a backup.
Always nice to be able to take a vacation, right?
Yeah.
Mm-hmm.
And folks, you've heard it so many times here, but because volunteer roles change, even though treasurers, and I'm going to say payroll administrators, might be among the stickiest because they are challenging tasks and sometimes tough to recruit replacements for. But I think Clyde's told you any number of times, and Angelica has, I have, for each of the functions, have a backup for your My Business account. Like, don't leave yourself stranded if an individual, for whatever reason, isn't available.
I got a call last week from somebody in our treasurer's webinar who was picking up the threads because their treasurer had died unexpectedly.
Yep.
Yeah, We had one exactly like that one as well,
Yeah.
that they passed
It-
away and they didn't have a backup. And so they were trying to scramble at the end, at the last minute, trying to figure out how to access ADP.
Well, and trying to figure
and
out how
this
to
is the way,
process year-end salary changes and all sorts of things. And
Yeah.
yeah,
and this is the way you folks can fall off the CRA screen as well. Now, I have heard a couple of treasurers say it's also the only way to get out of the job. So I don't mean to sound
not recommended, Eric.
Yeah.
Let's not
I do
suggest
not
that.
recommend it for anyone on this call. So just a few slides on insurance. There was some.
Just before you go, I'm sorry, I still got a couple more here.
Oh, sure, go ahead.
Return of an old item, says Reinhardt. Secretaries, caretakers paid between 5 and 12 grand a year. Should they be on ADP?
Why not?
Anyone working should, and they're being paid should be through ADP.
Mhm.
Yeah.
Yeah.
Yeah, our advice, some people still resist it, but the rest of the world thinks that everybody, all people are on payroll. And so, whether it was those COVID subsidies and all those things, our advice is that it is penny wise and pound foolish to try to scrimp on a few ADP fees and not do it all in one place.
Mhm.
Ignore at your peril.
Okay, thank you. And Kelly wants to know, how do we see what's set up with ADP online? I mean, as long as you have the access, you can go and poke around for yourself, can't you?
Yes, you can. Absolutely. But give us a call. We can walk you through whatever questions you may have. We'll assist you and we'll support you.
So Kelly wants to know, how will they know who has that access? There ought to be somebody in each pastoral charge, yes? And that person has the codes and the credentials and stuff to get into their site.
Church Hub has actually all of the treasurer's contact information. One, ADP, if you contact us first, we can actually take a look to see who that contact is and assist you with that as well.
Perfect.
We have access to that information.
Excellent. Thank you. I think that's the last of the questions this time around. Eric, off to you.
Okay, so we had a fair number of questions. We've been talking about the UCC Protect Direct and this program that we've launched, and I'll talk a little bit about it later on. But folks have asked us to go back to first principles a little bit and say, well, hold on, the handbooks in my region and various things all talk about the trustees and the church having a duty to maintain adequate insurance. But what does that mean? And I'm going to suggest that a whole bunch of things have changed. There was a time when most of us, understand that, hey, for our house, we typically want to have replacement value insurance because we were thinking we would replace it, right? Might not be the case always for churches that are maybe bigger than we might need today. Same thing with something like cyber insurance. There wasn't even such a thing 30 years ago. Even 20 years ago, I don't think there was. Probably just starting about 20 years ago. So what does it mean today? Full replacement cost property insurance and some relatively significant amount of comprehensive general liability. Now, in church, any entity that works with vulnerable populations, and vulnerable populations either can be either youth or seniors, or some other groups too. But I'm just saying you're not off the hook just because you don't have a Sunday school or something. There's increasingly, actually, there seems to be more and more stories of senior abuse and people taking advantage of power situations or high trust situations. So we do recommend that there be abuse coverage as well. And abuse coverage isn't always like lots of local insurers don't even offer it. And even national insurers ask people to apply for it separately. So that's just something to be aware of. The UCC Protect Direct program, it is included. You just answer the questions on the regular application. So again, general rule, you want to have risk removed for anything where our volunteers or our staff could be exposed personally or potentially put their church out of business. Oops. But you also have to be able to afford it. So there are choice points. You can buy insurance for almost anything, but then you'd spend your entire budget on insurance. And it's one of the worst things you buy it for peace of mind. You hope to never use it. So it's one of those expenses that you really have to just make some choices. So today, I would say that every charity, you should never join a charitable board in your community or anywhere else without asking if they have directors and officers insurance. To make sure that all our churches, our trustees, our volunteers, and so on, to remove any doubt about that, that's why we have an umbrella program that the national church pays for directly. So all United Church congregations in good status are covered under an umbrella plan. If you're a outreach ministry or an incorporated body, you have a different governance structure and you have to buy your own so far. We may look at that. We've tried to look at that, but just to say directors and officers coverage is in place. Comprehensive general liability you should have even if you don't have a building or even if you don't have property insurance. You can still get sued if someone has a slip and fall or all kinds of things that can happen that are related to your group gathering. I've had questions about home churches where people are meeting at the minister's home or someone else's home, that kind of thing. Again, you might choose not to try to scrimp on insurance, but having a minimum amount of liability insurance is a good idea. For property insurance, it needs to protect you to the level that you might replace. And in the worst case, like even if you weren't replacing, you'd still be on the hook for site cleanup costs if there was a huge fire or explosion or something. So you've got to, again, factor in, could we withstand that without having adequate insurance? And cyber insurance, these days, you need to have a number of safeguards in place to even qualify for it. And right now, we had it for a year until people realized that most churches don't have multi-factor authentication and those kinds of things. So right now, we're instead of having insurance that we pay for nationally, I had Hub actually provided in the first year for free a cyber response call center that all our congregations can use. So again, the trade-offs, a very common trade-off is around workman's comp. Lots of people ask whether to have workman's comp coverage. Well, in provinces where it's optional, and there are a few provinces where it's mandatory, most churches opt out, don't participate in provincial workman's comp programs because they typically have to include all employees. And your employees that are in part of the benefit plan already have coverage, whether it's an accident or not, the restorative care program and so on. So that's a choice that I would say many congregations make. My own congregation does. But it does exclude part-timers that aren't in the benefit plan. So if you have people doing 5 or 10 hours a week, and so some churches want everyone covered, all staff, and will pay that extra premium, again, where it's voluntary. That's a choice they make. Many congregations, and I recommend it, I don't know why I say just in urban centers, but I recommend having extra comprehensive general liability because the world is just a more litigious place. But again, the base policy comes with a couple of million of comprehensive general liability, and you can add layers of it to 3 and 5, up to 5 million and up to 8 million. Another way we all know, even in our own home, is having a higher deductible. And then finally, in the one that we've just gotten formal insurance approvals, insurer and reinsurer approvals, is to be able to move off replacement value where a church simply wouldn't build back at the current scale. and therefore wouldn't be operating on full replacement value. And in those situations, it's really important, really important that it isn't the treasurer who just decides and doesn't tell anybody, or the trustees don't tell anybody. Because if later on something, there was a complete loss, you would want everyone to say, hey, you know what? We made this decision. The board, everybody made this decision. We shared it with the congregation that, hey, that's a trade-off decision that we made. Treasurers should never wear any financial decision by themselves. It could come back to bite them later. So a few words about the insurance program. It's been a tough slog. People have heard me grovel on these webinars for quite a while, and we'll be doing some just for the participants in the program, separate webinars on upcoming enhancements and so on. But just to say, financially, it's been a huge success. The first year we saved congregations, we rolled back $2 million in premiums. So, across the country, that's the part that kept me going through some really pretty ugly times. We did that while, frankly, not meeting the challenge of providing appropriate service. But most of that is resolved now. The increases that even came back still had people on an apples to apples basis paying lower premiums than they were a few years prior. And the insurance market is still tough, although I do see premium increases slowing down somewhat. I wouldn't count on that, but that is what we're seeing so far. If you're not in the program, you do need to be underwritten. That means completing an application, providing existing information. If you've had an appraisal, you provide that. We don't guarantee savings, but in most cases, people find that there is a saving. And we do this big annual renewal now. So if you were applying for a policy now and were approved for a May 1st start date, that policy would go to December, because that's when we renegotiate everything with reinsurers. One of the things we broadcast, I'm not sure how much people looked at it, but we do have a cyber response program that's available to all congregations. If you have a cyber incident, it's not the same as insurance of paying whatever costs you incurred, but the response, what the insurance industry has found is about 70 or 80% of problems can be resolved by talking to knowledgeable people right away and getting good advice. And that's what, so we bought this service for a year. I would normally say that the national church is paying for it, but in this case, frankly, I'm making Hub pay for it simply because they realized that they hadn't met the service challenge. So this is a bit of a reparation, and I expect that in the coming year, either we will pay for it nationally or have our insurance program pick it up. We'll be evaluating to see what kind of service it's provided, what kind of help, that kind of thing. So it's early days there. Third-party insurance, this portal has been a real benefit. It is available to all United Church congregations, not just UCC Protect participants. And some regulatory stuff just got sorted out. So it's now available in Quebec again, which it wasn't for a while because of Bill something or other in Quebec that caused some compliance issues. We're going to be adding local hub contacts in BC and Quebec, provides French language support and some corporate account support out in BC. And we envision a very streamlined renewal process where you literally just tick a few boxes and tell us if anything has changed on one sheet of paper. And you will also have the option of moving off of full replacement, which will save you some premium, and we'll have some more formal communication on that coming up. So we're almost where I would have wanted it to be a year ago, is what I'm saying here. A slide, this is a repeat. It does still have to work like a business. Claims are adjudicated by the same professional claims adjusters, the same firm, SCM. I forget what it stands for, but it's, the prominent, works for all the big companies, and works for our program as well. And so it isn't that this thing's going to pay claims that other insurers wouldn't. That's not going to happen. The other aspects of trying to build up, what we're really trying to do here is take the profit the insurance company would have made, take the reduced commissions that would have gone elsewhere, and put those monies to work for our United Church congregations, because the only reason this thing exists is to serve United Church congregations and other participants. So, any questions on that bit?
Okay, lots of insurance questions, and a lot of them are I think fairly specific, so it shouldn't take too terribly long to plow through this. Robert says we currently have $2 million of liability coverage. Our charge supervisor suggests we look at 5. What do you think?
Yes, very, very common. 2 million used to sound like a lot. In Toronto, I would say 5 is the new base, is the new 2. It is an incremental cost, but it isn't. Again, the world's just more litigious.
Valerie says, questions about third-party insurance. She's afraid of scaring off tenants. We let a homeschool group use the church weekly. Should we have third-party insurance? What about a 4-H group? What about a concert if they get it in? I mean, if it costs them $200, they're not going to want to come.
That may be true. The concern. The first thing I would suggest is even using the service yourself, test it for some of those clients to see how much it might be. It's very common. You couldn't use a city or town property, certainly not in Toronto and most places. I think it's a requirement almost anywhere you go to, if you're a third party, to provide proof of insurance. The only exception really is if you're going to a hotel or something where that's like the cost of their business, it's built into their model. But we do recommend that third parties having their own insurance, because so that insurance, should they cause something, their insurance responds first, and our collective rates don't go up. And we should care more now about our collective rates because we're all in it together. And
somebody's pointing out in the chat, anybody that's part of a larger organization likely already has this, and you just need to ask for a copy of their certificate. 4-H would have liability insurance. Road to Recovery has liability insurance. Alcoholics Anonymous has liability insurance.
They all do. Or I don't want to say all. The 4-H club might not, but it's not just the United Church asking for this.
No.
Almost, if they went to the local town hall or something, it would be the same thing.
Yep. Paul says one of the troubles we've had with our current insurance broker is it's hard to talk with someone directly. Is that going to change?
If your current one is Hub, it's going to get, they're actually going to be committing to a service standard that they haven't been meeting. To be candid, I've had to, I'm peripherally involved. We buy this service, but we've had to turn over the entire service team.
Mm-hmm. There you go. And Catherine's pointing out quite rightly, you want to see a certificate of insurance naming the church as a beneficiary. You can't just see a copy of their insurance. That you need to have the church named.
Yes, and
we've never had trouble in my church getting copies of that from our tenants.
Yeah, it is a request, but I'll give you an example of how stupid this. It is stupid. It's annoying, but if you lease a photocopier, the photocopier company will either want a certificate of insurance, or they will charge you extra for the insurance.
Yep, it's a $20,000 machine. Yep, I understand. What's the time frame for getting a quote for insurance now? Says Arlene.
Well, get your application in, but if it's a complete application, it should be less than 2 weeks.
Can we purchase general liability through UCC Protect?
I'm going to say just, if the question is just liability, if you don't have a property, the answer is yes. If you do have a property, though, it's a question that the liability, if you're just applying for liability, people still want to know, are you trying to avoid property? Like, do you have a property? And are you keeping it relatively safe? So it's one thing not to have property insurance, but if you're letting something get run down and broken sidewalks and all that kind of stuff, they'll want to know that for the liability side. But the short answer is yes, you can. There are church groups now that either meet in rental space or whatever, and they just get general liability.
Yeah, and there's one on this list. Somebody says, we rent an office and use space in a funeral home for Sunday morning worship. So the general liability is probably sufficient for them. They don't own their property.
Oh, absolutely. And they probably don't have any, like, again, the first level of insurance is not to have any. Okay. No, it is. So you basically are taking your chances that you'll be able to deal with whatever happens. However, you don't want to do that when there's a chance of you being sued or something.
So here's a church that hasn't had a property appraisal in the last decade. Do they need to have one? Are they on the list? Should they get their own appraiser? What do you think?
Well, right now, I've been saying this for a while, but I'm meeting with an appraisal firm tomorrow morning that we know is willing to do things that, if we can provide the volume to do things at about 50% of the normal fee. And so I'm going to be looking to see if we can make that work. The idea would be that they'd say, come to Southern Ontario and if we can line up literally dozens of appraisals, we can drive the cost down. If you want to maintain full replacement value, it is prudent to have an appraisal done certainly every 10 years. The insurance companies say every 5. They do cost, they're not cheap. So that's why we're trying to find a deal. But if you haven't had one done in over 10 years, as a trustee, you should even know what the full replacement value is, even so you can make decisions and share that information if you're not going to insure the full value.
So ballpark, what does it cost, Eric?
I'm sorry? It depends on the size of the building. But 2,000 to 4,000 is not uncommon. And I'm trying to get something down to 1,500 to 2,000.
Thank you. Somebody's asking about your abuse insurance. Do you recommend criminal record checks for volunteers and staff working with vulnerable people?
Not only do we recommend it, it's a United Church prescribed requirement. And if you're not doing it, that's a separate conversation.
We have a June insurance renewal. Last year, our application got no response. What should we do this year?
Send it in, copy me, any of those. And we did lose control of inboxes. And as I said in the note earlier, some of that was self-inflicted. But by all means, try to get a quote this year. And the sooner you send it in, the better, the more time you have, in case there's any things to clarify.
Thank you. How do we, if we get a cyber attack, what do we do? Where do we phone? Where do we get that information?
Well, you should have gotten an email, and there's providing, there's contact names that you should register with this cyber box service. So if you didn't receive that back in the beginning of February, you could send us a note and we'll arrange to have it reset. But basically,
got it on a web page somewhere.
Yeah, it's on the UCC Protect Direct web page. There's a link there to the support service. But make sure you're registered because, obviously they want to make sure it's a church calling that's covered under the a participant. It's 24/7, 7 days a week, all that stuff.
Good. Those are the questions I got, Eric.
Okay. Well, I think it's Over to you, Steve.
Okay, cool. So not just to me, but to Dave Jagger, who's one of the staff in our philanthropy department. And I invited Dave to come online because we spend so much time in these webinars talking about how we spend money and how we report money, and not nearly as much time sort of talking about how we bring money in. But that's just as important, and that's Dave's department. So Dave, you have 4 different courses on ChurchX about how to do that. And I'm going to share my screen here and take the control away from Eric. I know that's dastardly. And I'm going to invite Dave to open your mic. I think you have permission to do that, do you?
I think I have.
Say something. Yes. Oh,
Hello.
good. You're making me feel better all the time.
Fly, hello. Yeah.
So this is the catalog at ChurchX for all of the United in Learning programs. And Dave's programs are over here, Called to be the Church, the Journey. So if you click on that, you'll get Dave's special catalog with a little bit of a blurb around this and a very corny video that you should go and see because it's great fun. And then you got 4 different courses, and I wanted you to tell us a little bit about these, Dave, and what these 4 are for, and where would people start, and what's the difference between them? Why do we need 4?
Sure. Can you scroll up just a smidge so we can
I
see
sure
the
can.
There we go. The infographic on the, what is that, left-hand side of the page. That kind of gives us a bit of a feel for the flow for these things. Getting started in stewardship is the first course, and just like the name says, for those who maybe haven't done any stewardship stuff in a while or ever, or want a refresher to get themselves started and going again, this is a place where you start. This is an hour online course. I know it says 90 minutes because it's an hour of content, and then there's some time for question and answer afterwards. There are 3 what we call homework projects associated with this course that you do after that hour is over. And in doing that, you and the team that you have or the team that you create will be ready to move on into more deep stewardship work and or to go in specific areas that your community of faith needs to explore and to work on. So we're going to, in that first hour of getting started, we're going to talk about stewardship as a spiritual practice. It's not a fundraiser. There are differences. We're going to talk about how we go about talking about stewardship. We're going to talk a little bit about our favorite 3 words, inspire, invite, and thank. And then in the homework time afterwards, because you can come to this course as an individual, you can gather some people and come together. It doesn't matter. It's up to whatever, where we want you to start where you are, not where you wish you were or where you used to be maybe, but start where you are. So you come to this and you're going to get 3 pieces of homework to work on afterwards. One of those is a small Bible study piece, because generosity and stewardship are spiritual practices. They're a key part of our faith as followers of Jesus. So we're going to link that together. You're going to do a small data project. So you're going to gather some information about your current giving patterns and look at that. And then you're also going to do a project to gather your team so that you actually have a intentional concerted stewardship team or committee. I don't like committee. Nobody likes committees. Teams do things that are exciting. Teams is our new word. So you're going to gather a stewardship team of maybe 3 people, maybe 4 people. Depends on the size of where you're at. But no one should stand alone in this work. And we know that the work is much more successful when it's taken on by a group rather than by one individual. If you've ever been that one person in your congregation who had an idea, and as treasurers, maybe this is you all the time, you know how hard it is to get something going on your own and how much easier it is when you've got other people with you working on it. So the third piece of the work is
what I know about treasurers, Dave, is that these are some of the most hardworking volunteers in the church, and
absolutely
they're almost always invisible. Does it have to be a treasurer on a stewardship team, or is this a job they can share?
Not at all. There are lots of stewardship teams out there that the treasurer is not involved with, other than perhaps providing information or data for them when they need it for part of their work. So this is not something that you have to be a part of. You may want to go home and go away after this tonight and think about, so who in our congregation should do this? and then go tap them on the shoulder and send them to sign up. Getting started in stewardship is free. It doesn't cost anything. Mission and service helps make this happen. So it's not, there should be no financial problems with it. The course is online. So whoever is doing it needs to have a decent internet connection. They sign up for ChurchX. They come to this page. They go down to the bottom and they find the next course, Getting Started. There's one that starts on the next week. It's next Wednesday night. So if you're go-getters, go get it. Find the person who you think should do this and maybe agree to sign up with them. That way they feel like they're supported. There's another one that happens in June. It's on the 11th of June. The second dates on those, so April the 10th and June the 5th is a reunion of the group. The June the 11th, the same thing. So in July, there's a reunion. It's a chance for the groups to get back together and talk about what they've done, celebrate their success. What did they learn? Was it as easy as they thought it was? Those kind of things. And just talk about what it was like to get started. We've got lots of space still for the April the 10th session next week. So I'd love to see that well, there is no fill. We'd just like to see more people in it. The more who get in, the better off they are. One of my team, because I look after a team of 4 stewardship staff who are spread out across the country. You may be familiar with some of these names if you've had an interaction with them. Roger Janes, who looks after Eastern Ontario all the way to the Atlantic Ocean. He lives in Newfoundland. If you've talked to Roger, you'll know Roger. Brenna Baker, who looks after Southwestern Ontario. Melody Duncanson Hales looks after Canadian Shield and Shining Water, so that's central slice, and then all of the other side of the map, all of Northern Ontario. And then Vicki Nelson, who looks after Manitoba to the Pacific. Those 2 clusters of regions there. Melody is the one who does the hour time for the Getting Started courses. She's great. She does a great job with it. And again, we'd love to see people sign up and get involved for it by all means.
Well, let's scroll back up to this infographic because that's really the entry point, and it kind of gets people's feet wet. But you're not going to learn everything you need to know in an hour. No,
heavens no. No. So once you've done Getting Started, depending on the situation in your congregation, your community of faith, and that's one of the things that we've been very intentional about with this program is everything in it is ultimately customizable. You know what you need and what your situation is. We don't. So only you can make good choices about how you're going to approach stewardship from the starting point of where you're at. So we're not going to tell you, here's the 3 best things you have to do in order to fix everything around stewardship, because that is, first of all, silly. And secondly, none of them may apply to where you're at. So we really are in this together to help make this happen. So after you do Getting Started, you might decide that the next thing you need to do in your congregation is you need to do a giving program. It's been a long time since you did a congregational giving program. And so it's time for a stewardship campaign. And then you would look for the next time that we're running, set up your congregational giving program. Yep, sign up for that. We run that twice a year. So we run it once in January for those folks who are planning to do a giving program in the first half of the year. And then we run it again in May for those who are going to do a giving program in the second half of the year. And I know fall has classically been giving program time, but lots of other people are doing it at other times now. So it's cool. You can tie it to different seasons in the church year. And we've got resources and we've got experience and tons of stuff to help you be successful. Like Eric said earlier, that's our goal, is to help congregations be successful, sustainable, and make good use of the resources that are out there in order to help people grow in their faith and do the things that Jesus told us to do. That's what it's all about, you guys. That's what it's all about. Yeah, if you've heard me talk before, I often say, I'm here to make you look good. So maybe you decide you're going to do the Set Up Your Giving program one. Maybe you decide after Getting Started that you want to learn more about inviting people to make planned gifts, bequests, gifts from their will and estates, that type of thing. So we have a module about that too, to set up a planned giving program for your congregation. Again, we got resources, samples, the whole bit to help you do that. That course is 2 sessions, 2 hours each. And that way you get a chance to learn about all the different ways that people can make gifts, but then also, so as a congregation, what do we have to do in order to help this happen more? How do we advertise? How do we get people excited about this? What policies do we need to have in place so that people know that if they make a planned gift through their will or through their estate, it'll be handled well and it'll do what they want it to do. All that type of stuff. So we talk about that, and then there are people who are available to assist you afterwards if you need help to actually get the work done. Or maybe you decide that you're not really sure where you want to go next. You just know you need to learn a lot more, and you want to get some work done towards setting up an annual stewardship plan. In that case, you would sign up for Stewardship Best Practices. That's our deep dive. That's our in-depth course. 8 weeks. It's a series of learning sessions followed by interactive discussion cohort sessions with our staff. And at the end of that time, you get some information about your congregation and where it's at, and also hopefully have got what you need in order to set up your annual stewardship plan. And once the weeks of learning and cohort are over, then you get basically up to a year of ongoing coaching and supporting from your regional community of faith stewardship support person. So this is the in-depth one. You want to make changes in the life of your congregation? This is for you. This will help you look at the whole picture.
What I really appreciate about all the work that you and your team do, Dave, is the sort of coaching and hand-holding and the personal relationship that your team members build with congregations. I mean, you're not just dumping a bunch of facts and boilerplate stuff onto people. You provide a kind of personalized support that I know my congregation has benefited from, and others have too. What kind of metrics are you getting? If you know, if a congregation goes through stewardship best practices, do their givings go up? How do you measure that, and how do you know, and how much?
So one of the ways that we look at that is, and this is one of our challenges, and where you folks have a big role to play in this, is we're looking at the statistics data that you submit each year. So we can look at what were your givings to local, what were your givings to mission and service, as you report through your statistics a year ago or 2 years ago. You do the program, you work for the year with the coach, and then we continue for another year or so to look at those numbers and see what's happening. Are we going to guarantee that your giving is going to go up? No, because there's a lot of variables at work in that kind of thing. As you are probably already familiar with understanding, 1 or 2 key funerals changes the entire financial picture for a congregation.
Yeah.
And you can't plan for that. Well, you can, you know, but you can't really plan for that. That's what planned gifts are for. But will there be a change? Yes. Do we see improvements in giving? Yes. Do we see number of people on par increasing? Yes, especially if you decide that those are the goals you want to set for yourself, and then we help you achieve them. Will you see mission and service giving increase? Probably. These are all good things that we want to know happen. The other side to it is it's not just about the numbers. And this is one of the more exciting parts when my team really gets all jumping and happy and bouncy about it, is we get stories like, well, we started to thank people and be intentional in our thanking. And 6 months later, it's like a new congregation. They like each other now. They're not at each other's throats anymore. The whole mood of the congregation has changed. We started to tell stories about what people's gifts are actually making happen, impact stories. Wow, we didn't realize we were doing so much. And we didn't realize the impact that we were having and all the ripples out in our wider community. And now we do, and we're all keyed up about church again. So there's that other kind of morale side to it that is just as important, maybe more so in some ways, than the actual financial numbers. But yes, we do see differences when people do the work. Yeah.
I think it can be really hard for clergy to talk about money particularly because it can appear to be, or can feel to us, to be self-serving. We're just begging for our salaries. But what I really like about the way that you're pitching this is that it's about celebrating and enhancing the ministry of the community. And paying clergy is part of that. That's important. Paying the organist is a part of that too. But it's about the ministry impact. It's not about keeping the lights on or paying salaries. And that just changes everything about how I talk about money in a sermon.
Yeah, we have a diagram called the discipleship flower that has, I think it's got 6 petals on it. And each of those petals is a spiritual practice that's key to the life of a congregation and also key to an individual's life of faith. One of those petals is generosity, but there's also petals on there like worship, caring for each other, sharing our faith, prayer, Bible study, those kind of things. Can you imagine a congregation that only did worship for like 3 weeks in the fall because they felt they had to? And of course not. Can you imagine a congregation that's like, okay, for the next 5 weeks, we're going to pray. And then they're done. Phew, oh, we got that over. Good. And yet that's often the same attitude we bring towards the generosity pedal and talking about how we use the resources that God has blessed us with and how we do that as people of faith.
We are hitting the time limit here, Dave. I'm going to give you 30 more seconds. What's your elevator speech?
Go sign up for Getting Started. That's my elevator speech. Tap somebody on the shoulder in your community of faith. Together, sign up for that. I'd love to see you out on the 10th to be a part of that. And let's take this journey together.
Thanks so much. And thanks for making time for us tonight. We're so grateful to have you with us.
Thank you so much. I'd love to see you all.
Eric, we're going to turn it back over to you to close us out.
Okay, then. Let me see if I can do that quickly. I probably can. And I do need to change this a bit. Bear with me, folks.
We're right down to the bottom, Eric.
Yeah, no, I know where the share screen is. Well, I'm going to run with this for the moment. Yeah, we're basically done. I would summarize, this is an old marketing message, but your generosity matters. And that's all the things around saying, and David, thank you for, we spend so much time on the expense side and the worry side. It's fun to celebrate and try to build as well. So thank you for that. And I'm trying to move a box, but I'm going to stop for the moment. These are slides that I've included that regulars will have seen. But all the messages around signing up, we talked before about having 2 people for payroll. Same thing. There shouldn't be anyone on this call that doesn't have a My Business account. There shouldn't be anyone on this call that isn't signed up for Church Hub. Again, our assessments are online. All those, that's a key expense for you to manage. We also have put in a lockbox arrangement, which isn't overly new technology, but is for the church. It saves time and money if you send your payments to this address, and we're trying to get that word out there in as many ways as we can. The statistics, if you haven't done them already, again, Susan puts some somewhat optimistic due dates out there, but I really appreciate just how often people are trying to get those statistics in. The earlier, the better. We do use them to gauge trends and try to figure out where we can help. Dave just talked about using those statistics as a baseline for improvement in stewardship. Again, we have a number of how-tos. This is where to find your statistics. I'm going through these quickly. If you're a new person out there, the intent is to have these in the slide package so that you can look them up quickly or jot down notes. But we have gone over these any number of times, so it's a bit more of a reminder for everybody. Same thing with the contacts, the key emails, whether it's loan payments, stewardship, you can see Dave on there, the insurance, the payroll team. There's a lot of folks whose job it is to try to help make your job easier. And then the presenters, our regular presenters, are always available for questions. And we're trying to get in the habit, and I speak as someone who isn't in the habit quite yet, of using the forum in ChurchX to share information more and more. So Clyde and I are often the ones answering, and Angelica too. But we'll try to answer the questions there so that there's a bit more of a discussion forum. You can browse it quickly and see if you pick up any nuggets from that as well. So we include some slides that we don't speak to just so they're there for quick reference and you don't have to figure out which webinar it was. So with that, I'm going to stop sharing and say thank you very much to everybody. And I was only kidding about having to die to cease being a treasurer. You part of the job is to try to leave things better than you found it, and to be thanked at an annual meeting and get away from it eventually too.
Well, thank you, Eric. So that is going to be a wrap for tonight. I just wanted to give you a heads up of a consultation that is coming, and we don't have a date yet, but sometime in the next 6 weeks, probably. I got an email from Alan Hall tonight saying that the Total Compensation Task Group is wanting to have input from congregational leaders like you folks on the question of sustainability of compensation. They'd like to do a 45-minute presentation and 3 tight questions for treasurers to take into breakout groups. Eric and I have said this sounds like a good idea, and it'll get him off the hook for creating another hour of content at one of our future webinars. But more importantly, and that's just kind of a joke, you folks are key. And the fact that you come out to these webinars month after month after month demonstrates that you have a level of commitment to the role and to the church, and we're grateful for that, and we want to have your input. So that's coming, and we'll let you know more about that as plans firm up. In the meantime, I've collected all of the questions in the meeting chat. I know that there's a couple more that have come flying in just at the last minute, and I don't have time to pose them to our team. But if there's something that's urgent, we have your email address, and one of us will get back to you personally, probably in the morning with that. We will meet again on the 24th of April. So this is not the April webinar. This is the March webinar that got postponed because of Holy Week. So 3 weeks hence. Looking forward to seeing you again. And otherwise, I hope that you continue to have a blessed Easter season, and we'll look forward to seeing you before the month is out. Have a good night, and bye for now.
Thanks, everybody.
Right.
Let me find the right button here, Eric, to take you guys into your breakout room. There it is. Bye for now, folks.